I bought PayPal calls dated for March 20th of 26. We'll return to that for a second. That's my question is, I don't know whether I should keep them or sell them before the call because I'm starting to have some doubts. We'll talk through that. But in order to deepen my research and understanding of PayPal even further, I I used the fantastic reverse discount cash flow spreadsheet that you made, and a funny thing happened on the way to heaven. I think it's funny. I think I understand. But when I put in, and by the way, it's very simple. Badger made it incredibly foolproof, where you could just follow his steps, and it's great. Because PayPal is a mature company that produces cash flow, it's ripe for exactly this tool. I don't usually need to, at least the way my portfolio is constructed, I don't usually need to use it, but for PayPal, I do. And when I put in the numbers for PayPal's cash flow relative to its market cap, it broke the spreadsheet because the column that calculates it basically said free cash flow too high. Like, this can't be true. Like, this can't be true. And lo and behold, it is true. Management is, in fact, predicting $6.5 billion of free cash flow for 25. And when I put in the rest of the numbers, when that box showed up, I believe that error comes because then that tells us that the implied value is that for those numbers to make sense, PayPal would actually have to stop growing and start declining. So we get an error. That's my interpretation. So in order for me to prove that that was true, I increased the discount rate up to from 10%, which I think it's actually quite aggressive for PayPal. I think PayPal you could argue for something closer to 9%, but I increased it from 10% to 11%. Again, side note, the higher that rate is, the riskier the company, the heavier, the more like you have to basically justify a greater return because the risk is higher, right? So when that number goes up, the risk gets higher. So anyway, I had to move the PayPal discount rate to 11%. And then when I did that, finally we got an assumed growth rate of, I believe it was something like 1%. So basically, in order to even get today's valuation to make sense, I had to over exaggerate the risk. I think that we see at PayPal. So I did that. That's a side note, and that confirmed that PayPal is either absolutely bottom fairly valued, or, and the only way it doesn't make sense is if it actually starts declining, its revenues start declining, which of course could happen. Uh, Here's my question to you. As I started getting excited about PayPal, I ended up buying a call for March 20th, 26, that will profit the way options do if the stock price goes up basically between now and March. But the more I was thinking about and researching PayPal badge, oh, sorry, one other thing. The reason I picked March was because I was getting 2 earnings calls in there before expiration. I'm going to get the one tomorrow, meaning tomorrow as of the recording date. You listen to this in the future will already know how PayPal did, but me right now, we don't know how PayPal did. But anyway, I get that earnings call, and then I'd get another one 3 months later. And initially, my thesis was I already can sniff the turnaround happen. The last earnings call, you could see the numbers are now trending in the right direction, but the market reaction was actually muted. And my tingly sense says, no, this is going to be the earnings call where we're really going to start to get traction in the market. Maybe if not overnight, in the coming weeks, we'll start reevaluating it. And if not this one, then the March one. But the more I studied this badge, the more I think sometimes things take longer. Like the re-rate, the fundamentals might be sound, but it's still going to take longer for the market to properly recalibrate, especially a company that's around 60, whatever, 5 billion, 67 billion market cap. So I'm sitting here looking at my King of the Jungle portfolio badge, and I have three options right now open. Two of them I'm confident in, but the PayPal one uh, right now is worth $239. I bought it for $340, so I'm down $100. That's a loss of 29% on this trade. And if I based it on that, it'd be anchoring. It'd be like, well, I paid more, I paid more, so I don't want to sell it. But I'm better than that. So I'm debating selling this before earnings call, pocketing the bananas, and if PayPal actually does, deliver superior results like I think is possible, then, well, I'll have cost myself hundreds of dollars of profit because, if the stock jumps up 5-10%, the options would have made it even more. So that's one thing. I'm like, damn, it might cost myself a lot of money. But then if it doesn't do well, right, I could, of course, rebuy the options for a later date cheaper. And I'm legitimately not sure what to do with this. And I'm curious given what I just told you, and since you're kind of the fintech resin expert, you have PayPal's competitor in your portfolio in the Adyen, and you study this stuff, and I think you have a better natural sense for what PayPal might say, and or how the market might react. I'm curious whether you would advise Monkey to just sit on his hands, and I made my decision. I get 2 earnings call shots, or maybe I was too aggressive in my timeline and it's a little too short dated to profit.
I know nothing about PayPal, but maybe the question is, I can help you try and answer for yourself is, like, what's going to happen in the world between now and March? Maybe, like, who knows? Things might stay the same. And then, I know you have to work out what that means for PayPal.
I do have a strong thesis I haven't gotten into yet because, I haven't done a deep dive with you. I do have a strong thesis that says PayPal is turning around. There's things I'm going to point to, but I think adjacent to, is that going to be quick enough, so to speak? Will that happen quick enough to proliferate through, call it the fintech ecosystem? That's the thing I can't quite answer, and that's the bitch, pardon my language, of having a shorter-ish call option for March, because I could be right, but it's going to take them, say, till June rather than March to really.
Yeah, and that is that's the downside of using options as opposed to just buying the stock. Like, if we reflect on, you sort of you dry your tears when you remember that you bought Rocket Lab calls, you didn't buy Rocket Lab stock, then the calls expired worthless, or it didn't play out because there was like an end, like a time date on that, and they expired, or you had to tell them. But if you'd own the stock, you just own it in perpetuity, come hell or high water. And in this case, it was like high water. So if your long-term thesis around PayPal is positive, you might as well buy the stock. Obviously, you get a discount when you buy it through options, so at least you get more leverage over your capital, that you can control more stock with less dollars if you do it with options than if you just go buy the stock. So I can't tell you. I've got no idea. Like, I'm a bear on PayPal, but only because I personally don't like the platform. I don't like the business model. I think companies like Wise, to the extent that they overlap, they don't really overlap at all. I think something like Wise is a better proposition for users. But PayPal have a huge volume, and so there's a bunch of people using it, irrespective of all the anti-competitive nature of the FX that it operates. That's why I don't like it. But I don't know your thesis. It doesn't talk to your thesis. But what's going to happen between now and March. You're going to get two earnings calls. Maybe the world is going to stay the same. Maybe we will tip into recession. Like, I hate to use that word again, but like it's possible. And like I've certainly got it front of mind with when I'm adding money to companies right now. And like Intuitive Surgical is in my mind recession proof because you know most individuals will spend on surgery through their insurer, and you're probably going to continue to have insurance in the US, whether irrespective of your wealth level. Like if you in real terms you have less expendable income, most people are probably going to still keep their insurance. It's not like a PayPal. Like, I guess the money is made from commerce and like helping transactions happen. And I would guess, again, I don't know the company at all, that the large majority of their money is probably from consumer discretionary. Because if you're going to go and buy like your baked beans and your nappies and like your household detergent and the stuff that you're going to buy, no matter what the economy is doing, probably not using PayPal for that transaction. You're probably going into like your Costco and you're using your credit card, but you might use PayPal. Tell me if I'm going totally off base. You might be more likely to use PayPal for like, some kind of fun purchase at something called, some e-commerce site or experience or something else. They're the kind of things you might cut back on if money gets tight.
I think, see, this requires a whole deep dive on PayPal stuff I'm pretty sure you don't know about yet. So I think for sure, my bullish thesis is way, way more bullish than what you're talking about now. I think they're totally rebranding themselves in ways that most people don't know about. But that's not really, for my question, let's just assume, and I know it's hard to play these abstract assumption games. Let's assume that my bullish thesis is more correct than not. I'm still left with the same question, um, which is, I think if I talk it through, the reason I think I might have made a mistake is because I bought the option that I thought was long dated enough in March, but I'm starting to sense that that's still too short term. That's only 5 months. And that at minimum, I'm going to need 3 earnings calls to really either be right, proven right, or watch it basically flow through the system, which would mean the more appropriate one would be for June if I still wanted to take a pretty, aggressive
Is
bet.
that what, again,
And
like
so,
you sort of thrown a question at me. I can't really answer because I don't know what's in your head, but,
right.
but I would just challenge
Yeah.
that. Like if
No.
March isn't long enough, why is June long enough? Like that's only another 3 months. Why not buy a 2027 option?
Right. Well, I in my urban portfolio, my real world portfolio, not, I'm sorry, not real world, my personal non King of the Jungle portfolio, I have 27 calls. But in the King of the Jungle here, the 27 calls are way more expensive, and I don't have the bananas to fund it. So it's a bit of a, for all our listeners, this is a bit, I'm skating on the thin line, thin edge, where I could be completely wrong. And exactly, March isn't long enough, but the longer I go, the more it costs. And so that's the safer thing. And weighing, I'm legitimate. Oh, man. Of course, the moment I sell it, they're gonna knock it out of the park, and the stock's gonna jump 20%. But that's greed talking too, right? That's kind of like Momo mentality. And so I do, by the way, have shares too in the King of the Jungle. So I'm playing this both ways. Yeah, I'm really not sure whether before today's day I'm gonna keep this call or not. I guess our patrons will find out in the trading channel to see what I've done. I think the safe way would be to sell them and be happy if they go up because I still have a couple shares. If not, be happy because I'll get the June options even cheaper. That's probably the mental model to go in and not get sidetracked by trying to get to 1,000% gains for the year with 4
Don't get
days left in
don't
our
get